will start off in South Africa. The country has been making steady progress in attracting foreign direct investments. It made the biggest move globally, rising from 11th to 7th place in a recent global FDI confidence ranking report. Now, Egypt is the only other African nation to feature in the Kearney survey, coming in at the 13th position. For South Africa, there are concerns, though, that U.S. tariffs will dampen sentiment and also derail further progress. Here's CGTN's Sumitra Naidu with more.
Emerging markets tend to provide greater returns for foreign investors. According to Reserve Bank data, FDI inflows into South Africa grew 56% to $661 million in the first quarter of 2025. Keeping up this momentum might be difficult, with US President Donald Trump's 30% tariff hike set to be implemented on the 1st of August.
It will have an impact initially, I think, particularly for US businesses potentially looking at investing in South Africa, and the knock-on effect of the tariffs going in the other direction. You know, if you are a manufacturer in South Africa and you're exporting goods to, say, the US, but you rand-based, cost-structured, focused, and you're running an efficient business, there could still be elements of almost arbitrage there to mitigate that. But I think what it does do, it just adds another layer to the complexity of investing in South Africa.
South Africa may become less competitive and more expensive, but it is not alone. This could be a positive if other countries turn away from the US.
Trump has threatened to impose a 30% tariff on exports from the EU to the US, from Mexico to the US, 35% from Canada to the US, 50% from Brazil to the US, 25% from Japan and South Korea to the US. So are we at a particular disadvantage compared with everyone else? The answer is no. Everyone is potentially being penalized.
Foreign direct investment flows into South Africa have been improving, but they're still very low. Much of that investment comes from the United States. While some economists believe that there will be some impact once the US tariffs kick in, they also believe that South Africa needs to look more inward to address many of its own domestic challenges in order to become attractive to investors across the globe.
You know, we've got high crime rates. Right now, we've still got severe logistical problems, a rail network that is declining, our ports that are considered amongst the most inefficient in the world, and above that, all these criminal syndicates, incompetent municipalities that don't know what they are doing and can't take decisions, and over-regulation of companies wanting to do business in South Africa with black economic empowerment and other restrictions. And there is a distinct reluctance to invest in this country, not only by foreigners, by the way, but also by domestic investors.
South Africa has benefited from big American company mergers and acquisitions in recent years, but the country receives more FDI from Europe, with the Netherlands accounting for the highest investment, followed by the UK. Closer to home, inter-Africa FDI has grown significantly in recent years. According to the World Bank, inter-regional trade made up 21% of sub-Saharan Africa's total inward FDI stock in 2023, another potential growth area for South Africa. Sumitra Naidu, CGTN, Johannesburg.